Traders, on today's show, we're giving away two second-gen AirPods Pro. And although you're a bit late to sign up for today's giveaway, you can always participate on next month's by clicking the link below in the description and by going to edgeclear.com/deli to register. What's up, traders? Anthony Crudele here, and thank you for tuning into the Futures Radio Show podcast. Today's panel, we will discuss how to use volume tools to gain an edge in the markets and how to build a playbook around these volume strategies. Also, did you know that you can get today's chart deck? So everything that Josh and Ian and myself are going to be discussing is going to come together in a chart deck. All you have to do is just click the other link in the description, sign up, and you'll have free access to all of my resources, including the chart deck. Today's podcast is sponsored by EdgeClear. Futures Radio Show listeners can now trade at EdgeClear for a low introductory rate of 59 cents for most futures products and 20 cents for micro products and event contracts. Fund with as little as $100 and pair this with Sierra Chart's Teton order routing to receive one of the lowest all-in fees in the industry for new EdgeClear members only. Check it out at edgeclear.com/deli. Let me bring in the guys now. So we've got the crew here. Here we are. So first off, let me just introduce you to Josh. Josh, he's been on the show a bunch of times in the past. His name's Josh Schuler. He's been a full-time trader since 2013. Started working on the retail side and moved to the institutional side, working for a branch of RJ O'Brien as a broker and a director of managed futures. Currently, Josh runs a family fund and consults with developing traders with his skills development firm, TradeWithProfile. Welcome back to the show, Josh.
Hey, brother. Good to see you.
Great to see you. And then we've got Ian Blank. Ian, you've been on the show before. Today, you're going to be talking a lot more within today's show. Ian is a director of brokerage services at EdgeClear. He began his career in futures in 2015. And since then, he has worked with everyone from the individual trader to the professional, to with algos. Ian does a lot of stuff at EdgeClear. I've gotten to know him a little bit over the years. He's a great guy, and he regularly trades futures and options. So, Ian, welcome back to the show as well.
Happy to be here. Happy to be participating, and let's get into it.
Yeah, we're going to get right into it today, everybody. Like I said, in the middle of the show, I will go over who the winners are for the giveaway this month. AirPods Pro, I use them all the time. Remember, edgeclear.com/deli to sign up for those giveaways that we do every single month. You know, just the two of you, before we get into discussion, I know Josh has some slides for us today. And like I mentioned, everybody, they're going to have a chart deck for you. Give us a little bit, just a real quick background on your guys' trading and why the topic of discussion today with volume and order flow means so much to you. Start with you, Josh.
Yeah. So, I mean, the things that we'll talk about specifically come from like day in and day out working with developing traders and trying to help them organize the market in a way that they can come to it consistently. And you know, that what's great about the market is a little bit like what's great about podcasts is that everyone can have one. What's not great is that everybody can have one and everybody can participate. And so that means that some of it's not great. And that's not anybody's fault. But I mean, when you're talking about a 150 trillion plus industry, it's highly competitive. And when you're in the vacuum of DIY trading development, it's just really hard to figure out like what's going to work and what is helpful. And without kind of a baseline understanding of what works in the markets or how the auctions function, it just gets really hard to get your way through that. So, I mean, the thing that I think about with the stuff we're going to talk about today is like how to organize the auction around things that like how that process works. And then how do we see how that works? And then how do we translate that into something that gives me an idea that I can come to every day? That I can clearly know, hey, what's the opportunity? What am I going to risk for that? How will I know that I'm right? How will I know that I'm wrong? Rinse and repeat.
Got it. No, and everybody, I can tell you, I've known Josh for years. I've played golf with him. We've hung out together. He's the real deal. He's out there. He really trades. He knows his stuff. He's taught a lot of people in this industry. and he's seen a lot of traders become successful from some of the things that he's talked about today. Ian, you also see what a lot of traders are doing. You're on the brokerage side, and I know that you work with a lot of different traders. And what we're going to discuss today is something that you too have seen a lot of traders have success in trading futures with.
Yeah. So, I mean, for me personally, there are traders who I work with who don't use these tools. There are those that do. I think really what it comes down to in my own trading or observing others is, like Josh said, you can kind of create and build a playbook around these tools. And, coming into trading and brokerage, Josh and I have known each other a long time. I work with Morad Futures Trader 71, and these are the tools that they focus around. And so for me personally, a lot of my own trading was developed through learning from the two of them, really, and talking with them. And then for the clients I work with and traders I work with, I just, however you want to trade, it's how you want to trade. But for me, when I get to talk shop about these types of tools with people, I find that people have a very good understanding of the structure, in my opinion, of the market and how to utilize that versus, people who might be relying on different indicators. Not that they're right or wrong, just my experience.
100% agree with you. What we're going to hear a lot today from Josh is auction. We're going to talk about structure, and let's just go right into it, Josh. Let's pull up these slides if you've got them.
Yep.
And I'm very interested to see what you're going to be showing all of us today.
Yeah. So
we'll see if we can get it going here.
Yep, absolutely.
And I think while we're doing that, Josh, just quickly talk about just why you always stress on calling it an auction. You say the auction's still open. You didn't even say the market's still open.
Yeah. I mean, I look at, we're just, hopefully you're seeing some slide deck here. Excellent. Yeah, I mean, essentially, and this was an eye-opening thing for me years ago, was on the retail side. I'm like looking at all these squiggly lines, and I'm like, for whatever reason, I ran across an old CBOT manual on Market Profile, and it, heard Dalton talk about like the auction process, and I was like, wait a second, I know how auctions work. So all these like squiggly lines that we're looking at, really all we're trying to do is we're just trying to graphically see how auctions work. And that was a real eye opener for me. So the slides that we're going to go through. So kind of what we're going to do, we're going to just make sure we have the same definitions that we're talking about, and that you're kind of in the right place and you know what to do with the information that we're going to talk about. And then we're going to go and replay a trade that I took this morning, and talk about like how you can do something similar, if that makes sense. So
I love it. And I love that we're going to be doing the trade replay of trades that Josh actually took this morning, putting all of this into context of the situation.
Yeah. So here's a couple common challenges that I encounter working with traders. You either find yourself on the right side of the market, but you're struggling to get that breakthrough consistency, or you're finding the auction continuing in your direction after you exit, or you feel like you need to watch the market all the time, or you find yourself getting stopped and then the auction continues in the direction that you intended, or you feel like FOMO is just driving many of your trading decisions. If that's where you're at, you have lots of company. Like that's a very common experience. Now there's some risk around that. The risk is that that's embedded, and maybe you are or not aware of, but like without understanding the difference between kind of the narrative flow of the auction and categorizing it in a playbook, you're just kind of kept in this endless cycle of every price and every time is actionable, which then results in decision fatigue and decision paralysis. And it impacts results at the full stop. And the cool thing is that the antidote to all this is pretty simple. I mean, I'm gonna say it's simple, but it's more challenging than that, but we're gonna try to make it more simple. Is that to get consistency, you basically need a developed and confident playbook, and then risk management around that, and that will lead to that positive excursion. So we're going to talk about like, what does a playbook mean and how do we assess that? So a couple other definitions and ways to think about. One is 2 questions to ask about the auction all the time. So these are narrative things. They're like, what direction is the auction attempting to go? The second one is, how good of a job is it doing? Okay, it's going higher, but should I care? Okay, it's going sideways, but what's happening under the surface? That gives me really good insight into what's likely going to happen next, and that's where opportunity is. Next, price is the only indicator that every market participant sees at the same time. So an institutional desk, a retail YOLO trader, somebody that's an edge clear client, the only indicator that everybody's looking at the product of your choosing is price. So what the volume tools that we're going to look at do is they help us answer questions around that indicator of price. They help us qualify it. So one of the things that I'm asking all the time is price following value, or is value going back to price? What that essentially is telling me is not just what's happening, where is price, but what's happening at that price. Are there several participants at that price, or is there nobody there? Like, think about a real estate market. Okay, I've seen a whole bunch of houses sell at $750K for a 3-bedroom ranch with 2,000 square feet. And then now I see one sell for $1.25 million. How do I think about that house that sold for $1.25 million? It could be the first of many, or it could just be just one, right? Until I see more transactions at that 1.25, I don't think it's as meaningful as the ones that are lower. That's the relationship of price to value. And essentially every decision that I make, if you want just a baseline good orientation of how you're organizing yourself and orienting yourself to the auction, thinking in terms of price relative to value, and is price following value or value following price. Volume analysis helps us qualify the quality of the participation at those prices. That's all we're trying to do. Okay, I see it at that price. How likely is it to keep at that price, or continue at that price, or sustain at that price? The volume tools help us discern that. And that's what we're going to basically look at. So those are the volume tools. Now, that helps us understand the narrative. It doesn't really help us like with the trade. Okay. So that's where we translate this narrative into consistent execution, and that's via playbooking. And I didn't come up with this. I got to give all the credit to Bella at SMB. His book, One Good Trade. If you've not read it, total blurb for this. Should be on your radar, as well as his book called The Playbook. But he had this one quote that said, your thesis about the auction. So this is where you believe the auction is going to go, and a setup from your playbook. So here's the categorized approach of pattern that I look inside that narrative that I want to act on, and then confirming that on the tape or the order flow, plus the fight for price. That's one good trade. So if you want to get towards that consistency and the confidence, this is a great formula to do that. All right. So you guys with me so far?
Oh yeah. I think some notes I'd like for you just to, complete with the slides. Then we just I think we have a good discussion on it. Yep.
So what we're going to look at next is something that I call a playbook trade. So a playbook trade is what I call a 4-question playbook setup. So every trade that I take follows 4 questions. And it essentially says that, hey, I know there's a pattern of normative auction behavior that can be repeated and leveraged. And it's a pattern of auction behavior that I'm able to prepare for, anticipate, and execute. That's a deliism right there, right? And then it requires, I got to understand the mechanics of the auction, and it honors these 4 questions. So what these 4 questions are is the first one: what's the opportunity? Now, if you want to immediately distinguish yourself from all other retail schmoes, you will take a trade based on where you believe the offset is first, not the trigger. I think I did 150 one-on-one free consults last year, and there were 3 of those where, when I was doing a trade playbook audit, that they took trades knowing where the target was first. If you have an undefined target, how do you set the risk? And that's the second question. It's like, what am I willing to risk for that opportunity? Like when I was running a managed futures desk at RJO, and if I go put $1 million on a trade, my risk manager is going to come there and go, hey, where are we going? What warrants us putting up this type of risk? Why do we believe that's reasonable? If I don't have a case for the destination, then I don't have a case for the risk. Most traders who are developing define opportunity by some triggering behavior. Even with some of the tools that we're going to look at here, they're looking at some kind of impulse, and that means I'm in, I go. That can definitely mean in or go, but that isn't the opportunity. For me, that's helping me tighten the risk of what I'm going to defend. It has nothing to say about where I believe that's ultimately going to reside. By knowing where the target is first, then I can set the risk. Once I've set the risk, the third question is what would tell me that I'm right? Like at the end of the day, y'all, we're storytellers. None of us know how it's going to play out. So we got to build a story. And just like in writing novels, there are better storytellers than others. So how should it play out if I get into this trade? And then what would tell me also that I'm wrong? If you follow Denise Scholl, who I highly recommend that you do, her Behavioral Alpha, the brain, once you commit risk, many of you know this, if you don't know this, once you commit risk to a trade, your brain will do absolutely everything it can to stay in that trade and to fight any signal that says I'm wrong. So the way to get around that and to be able to make the good decision when it doesn't work is to actually say up front, before you even pull the trigger, what would tell you that you're wrong, so that you can know how to take that action if and when that happens. Okay. So all of my playbook trades are 4-question trades, and I categorize them. So I actually have hashtags for them. So these are some of the trades in my playbook, and I know what all of these trades are. And in fact, this morning, we're going to look at one in the bottom right here. It's a DATR. It's a day after trend trade. Okay. And the criteria around this is that the prior day has to have a trend to it. And what I'm believing is that as long as I'm holding, and I'm going to actually switch screens over here and go to an active S&P chart. We're going to change and present a different one. Get into this trade.
Rob is saying really reminds me of poker and telling a story with your play.
Mm-hmm. Yeah, absolutely. So as we're looking here, we're looking at S&P. This is actually on Edge Pro X from Edge Clear. Fantastic platform. But yesterday, this is the TPO chart for the ES, and we have a multi-distribution trend day. So in auction theory, there are 5 open types and 7 day types. So it's a way for us to categorize auction behavior from day to day. Those types of days help us know what's likely to come next. And if I have a strong directional day, very likely the next day I will get some form of follow through. And as you can see right now in the live market, the ES is trading above the trend day. We opened inside of it and heading above. Also, there's 50% of that trend is here. That actually was the low of the day. And the general idea is, for me, if the prior day was a trend day, as long as I don't exceed 50% retrace of that day, I'm looking to be in the direction of that trend if I open in range to both the prior day's value as well as the RTH new high. Okay. So the fact that we open here, don't fail below 50%, gives me an opportunity to be long for this target and this target in the trade. Now, I took this trade not in the ES today, but in the NASDAQ, same story. So we'll jump over to the Qs. Also was in a multi-distribution trend day, opened above halfway back, and the opportunity was to be long. So a day after trend day, you can just know, like if the prior day was a trend day, you can know that Josh Schuler, as long as we are, holding 50% retrace to the prior trend day, I'm looking to join that trend for a second day follow through. Like that's the trend, and it's going to happen in the first hour. So it's a timing component, it's a destination component. Like the how will I know that I'm right? Well, it's going to play out in the first hour. How will I know that I'm wrong? We're going to not be able to hold 50%. We're going to start to eat back into that trend and cancel that trend out. I'm not going to see what would tell me that I'm right. I'm going to see order flow, like smaller time frame order flow that goes in the direction that I want to go. So the smaller time frame impulses are the types of strength that I'm looking to join. And that's essentially what we're doing when we look at these volume tools. So let's go back. We're going to actually now go back to the open, or a little bit after the open, and we're going to play this trade back. And if you don't have a platform that allows you to do replay, I would encourage you to invest in that. That is a wonderful, wonderful tool to have.
I never used it until this year, and it's now something I'm doing all the time.
Mm-hmm.
It's become a slight addiction.
Yeah, it's, man, it really makes a difference because it, like doing the actual trade itself is one instance. Being able to replay it or go over it, that's the second instance. But if you can go back and like replay that in real time, that gives you multiple instances, and the ability to forward accelerate your development is huge. Because like some of this, there's a bell curve in development. Like as you figure out your playbook and you figure out what you're doing, like you'll get better and better as the years go on. Well, how do you gain years of experience? Trade lots of days around stuff that works, and you'll get there. Actually, picked the wrong day here. We're going to go to today.
Ian, real quick about on what we're seeing. This is on EdgeClear, and what exactly that Josh is looking at, and what he's able to, and the tools he's able to pull back that data and go over.
Yeah.
This slide.
Yeah, definitely. I mean, right now, Josh has got up one of our charts from our Edge Pro X platform. Full disclosure, it's built on a product called Motive Wave. Very good product, in my opinion. And he's got TPOs up here. And then what you're seeing there to the left with each of these market structures is the TPO. But then some other cool tools that, I'll just say like Edge Pro X, as far as the price point and what it offers, I don't think there's a lot out there that can beat it. He's got some custom cloud levels, it looks like, that he's built into there. Those are the lines going across where you can see sort of probably price that's either interesting to Josh or important in the structure of the auction. Mm-hmm. And then volume profile on the right. So you've kind of got everything here on one chart as far as your TPOs. So that's your structure that I'm sure Josh will talk a little more about when we get into this replay. And then your volume on the right. So everything that you want as far as an order flow and volume type setup can pretty much be added to one chart without it. This may look chaotic to some people out there, but if you start to kind of add these components and work with them, in my opinion, like you can pick this stuff up and it'll make a lot more sense when you're seeing. He's also got extensions there off of the TPO. So you can see like E1, E2, E3, those are extensions off of the initial balance that we put in. So a lot of really cool tools on this. I'm actually going to probably have to steal Josh's chart templates after this one.
And you know what?
If you want them, you have them.
Go ahead, Josh. Sorry.
Yeah, no worries. So we got it started here right after the open. And this is basically the time frame where I spend most of my time. And I look at a TPO chart. So what a TPO chart is, looking at how much time we spend at prices. So volume profile in this question of like, what's most important around price? Is it time at price, volume at price, impulse at price? That's delta. Impulse in time, that can be another way to look at delta. And we're just really trying to look around strength of participants who have the same conviction that I do, prices that other participants want to be active at. And the fastest way that I can talk about like what a market profile graphic does, or even areas in a volume profile where we see a build out. I mean, Dele can tell you from being on the floor. If you've ever gone to the board of trade and looked around, you'll notice that there are no charts. There's quote boards, there's lots of price, but there are no charts. I mean, now guys off upstairs and had charts later on, but in the pits there were no charts. So essentially what we're looking at here is the same behavior that would have happened on the floor, but we're just having to translate it into visually what we would have heard. So if you see a build out in the profile where there's competition between buyers and sellers, that's when the pit's getting really loud. When it's very thin and we're not participating in a lot of those prices, nobody's around except for the schmuck who lost a bet, right? Like we're basically translating. So the ways the auctions have worked for years still work that way. We just have to approach it differently because we don't have the floor. But those mechanics and the behaviors of the auction still in play. So like when I looked at yesterday, my plan coming in today, I mean, we had some early participation, and then we had a big spike with like not a lot of competition for price, and then some late participation around the most traded price or value for the last 5 days. And I use that. I use a good contextual reference for me is where is price relative to the last 5 days and the last 20 days. And the reason I do that is because we're trading derivative products that have derivative products of them, options that have weekly and monthly expiration cycles that impact where inventory is. Okay. So it's not arbitrary why I'm picking those time frames. Like this is the mechanics. So here you can see we're opening inside. There's that 50% range. I'm letting the thing breathe a little bit because I've got this composite area here for the last several sessions that essentially if I'm above 50-60, I'm looking long. If I'm below 50-60, we could actually eat into this impulsive structure and revisit the lows. So I'm really watching for behavior here. Now, if I sustain above here per my playbook setup, I'm looking for yesterday's that TPO or TPOC, most traded price by time late in the session, and new RTH highs with a stretch target to 240, which is an untested reference in the auction. So I got a game plan. Now all I got to do is find the triggering behavior that matches that and gets me into it. And so that's where we're going to go down here. We're going to look at a 3-minute time frame.
That's what I use. I use a 3-minute.
Yeah. Brian Shannon converted me years ago.
Funny enough, same here.
You use 3-minute too, Ian?
I do. Yeah.
Okay, so what we've got here is we've got candlesticks, but we have volume profiles. So these are volume profiles on a 3-minute basis. I have the full day's volume profile, and I have the developing market profile graphic behind it. So again, it's all in one place. So I'm not having to look at multiple charts. Like I'm trying to reduce the field of focus so that I can make easier decisions. And I'm looking for 120 here and then new highs. So those are the targets. Off the open, I've got a little bit of an impulse. I've got a little bit of a slope to VWAP. That's another tool, a volume tool that we can use to assess value. And I'm looking for just some impulsive buying to step in here to join. All right. So what we're going to do now is we're going to play this back. And it's just playing at 5x speed here. Actually, we'll go down like 2x speed.
Yeah, I was going to say slow
5x
it a little bit.
Slow down a little bit. And where we're testing around that 15,050, and notice that we're getting, there's these little, just to give you an idea of what these, I'll pause it real quick. These bars, these lines that show out here, what I want to see is I want to see imbalance in participation. So we tell our traders all the time, if you want good excursion, find strength and go in that direction, or find somebody who's trying to go away from that area in strength and then fail. It's the strength in the market. It's a little bit like laws of physics. Objects in motion should stay in motion unless acted on by an opposite or equal or opposite force. So if I see an impulse, I should believe like a semi going down the interstate. If that thing's got momentum, it should carry on. And so if I'm leaning into that, I should be able to get some follow through and some extension. I can also defend that. All right, here we're in a really noisy spot here. And so what I'm looking for is I want to see big buyers stepping in kind of above 15,070. That's above that 15,060 area. Because right now it could be, we could fall out of bed. I need to see, and I'm seeing some people trying to test. Another thing that I'm watching here is relative volume. Like the stars align when I get high volume or participation in a period of time, high impulse. That's the delta between buyers and sellers. All of those stars align gives you really high confidence in the trade. And right now, there's nothing to do. There's no trigger. I still know where my targets are. I just got to find some strength to lean into. And we're just...
One of the things I want to bring up real quick about the volume, I don't know how long it's going to be in between here, but I just want to make a quick comment about the pit. We mentioned that. Think about this, everybody. There was times where I would stand in the pit where if we would be going up and we're making highs, we're going one even bid, one quarter, one half bid, two even bid, and all of a sudden somebody comes in and goes 3 even on 200, and they just and half the pit goes sold, right?
Yeah.
And somebody just bought a large number at the high, and all of a sudden we go add 2 half.
Mm-hmm.
That's when you see a lot of offers, or you see a big come in.
Yeah.
And what happens is that if that price action doesn't follow through at that point,
yeah,
you're almost, in today's world, you look at that as a trap, right?
Right.
Because if all of a sudden now that buyer ran into that wall. So when
Absolutely.
you see a big sell come into the bottom or a big buy into the top, and you see that delta be like, oh, they bought 350 to 0 or 500 or whatever it is on the E-Mini, That's all, and they turned off that means that they're done potentially in that moment.
Absolutely.
Yeah, same way. I use the volume imprint here with the Delta print, which you can get on Edge Pro X2, so that I can see that participation up towards those levels, right? Like if you want to see some follow through, you got to know that, like you said, Deli, that people aren't just getting trapped, what you would call it today, at that top, waiting for that to come back down. So
here's the triggering behavior for me, real close. So we knew that we had that composite level in the auction. We tested below it, and all I found was buying imbalances. I found failure to participate. So as we went lower, we're not being able to get more people participating as we're going lower. That's that trap. We come back above that reference, and what you're going to watch now is you're going to see the momentum start to go the other way. Exactly what Deli's talking about is that the auction gains confidence to go in the other direction because it knows it can't go in that direction. You may have felt this if you've like, I'm going this way and it's not working. So then you try to flip, it's like, that's the psychology of that. By knowing where I'm trying to go, I stay out of that noise, and I could just look for the trap that's going away from the direction I don't want to go and now participate. So now what this is going to allow me to do is that if I now get back above where this last sell imbalance was at 70, I'm long the trade, and my stop is going to defend all of these buying imbalances. So I'm defending strength. I'm defending the fact that I had participants who could not go lower. Now, if I go back through, I shouldn't be able to go back through those. That would re-engage and give more confidence. So we're now long. Okay. Stops 15,040. We're looking for 120 first, 139 second, 240 second. So what I should see now, like what should I start to see now? This is that third question. I should start to see continued buying order flows, and that can be, delta at price. So you see buying deltas. I should see the cumulative delta start to kick up. I want to see additional participants wanting to go in that direction. We're not going to be able to eat into these trap traders at all. Like if we eat through those, I'm likely wrong. But as long as we don't, we're pushing higher. And I can actually, I'm, up on the trade a little bit here, but if I see additional confidence coming in that direction now that the auction actually gets the confidence, that can allow me to add even more into that size, because I have even more confidence in the target. I have people that all the time like, well, how do I add into a trade? You add into the trade because you have high confidence in the destination. If you don't know where the destination is and you don't have any confidence in that, why would you add into it? You're just opening your risk up even higher. So right now we're hanging out. There's nothing to tell me that I'm wrong. I've got alerts, back below here, because if we eat through here, then, I could be wrong. And this is also happening while Powell's speaking this morning. So we do have like this kind of binary input in play.
Talking about the adding side of things as well, I used to watch, if you watch the order flow and you see that it's balanced on both sides as you're going in a direction, and that just means that there's, we're trading, right? You could feel it. I remember this is how all this started, was obviously in the pit. You'd be like, oh, one even bid, right? One half bid, sell you 10, buy 10, right? And next thing you know, somebody be like 60 bid, 70 bid, sell 10, buy 50, two even bid. That's just working it. And all of a sudden, it always gets really loud at the top, followed by a quick moment of quietness, and really loud at the low, followed by a moment of quietness, because at that moment, you're like, are they done? And that's really what I think an order flow tool tells you, is like, did we hit the wall, or is it just working its way through areas?
Yeah, absolutely.
Throughout this, Josh, are you moving? So if you like the area, are you moving bids in? Are you just adding at the market? How does that work?
Yeah, I'm a market in guy. I have set stops and I have set targets. And I'm just watching behavior. Like right now, there's this total fight. One of these is going to give one way or the other. So like my adding into it is I'm going to see that capitulation from one side trying to like hold it down. And I know from being able to look at the composite auction, unless I can hold below that 15,060, which was the most traded price from last week, like it's that combined with the prior day being that strong trend day, like it's the sellers are on notice. So
It's
I'm just
so
kind of,
important.
watch this area. I've got the initial position on again. I'm not wrong unless I get below 15,040. So I'm just sitting in it. There's nothing for me to do here. I'm just waiting to see, and if they try to test lower, I should see them fail testing lower. I should see them snap back higher. So that's the inner dialogue that's going on. And we're having that playbook and having those 4 questions out there, man, really sets you, in place to do what you want to do.
And you're allowing the trade to work too.
A
lot of what I see in brokerage, right, is when we kind of push back down into that area, you get the people who are a little timid and don't want to continue to have that risk on. And so you mentioned this already, Josh, but they might take that trade off.
Yeah.
And then the auction follows through in their intended direction anyway. Right?
That's right.
But by answering your questions first, you already know where you are wrong and where your risk should be on this trade. So you can sit, not have to think a whole lot unless you want to add to it and wait for that to confirm or tell you you're wrong.
Yeah.
People hear Pax and I talk about this all the time. The first thing we were taught on the trading floor was second trade first. Where are you getting out before you're getting in? Because Pax, as we all know, he talks about, he buys his trades. That's the way he looks at it. And psychologically, that works well for him, because if he's like, I want to buy them here and this is where my stop is, if that risk is $1,000, I bought $1,000 worth of that trade. That's the way he feels mentally, because in his mind, that helps him heal quicker. Because like you said, Josh, going back to what Denise Scholl said, I don't care who you are, how long you've been doing this, the minute you get in, something changes a little bit. But sometimes I do this similar to what Pax does. I look at what that risk is. So I've already accepted it. So I'm like, either you're going to come get me or I'm going to come get you. So I kind of play to that in my mind, where I'm like, you want to go get the stop? Go get it, man. Whatever.
That's right.
And you just got to, and it's like almost how I talk to myself, and then all of a sudden it starts going and I'm like, you know what? Maybe I should be taking more out of this, because this moment is now supporting what I'm thinking.
Yeah. Okay. So here's the ad spot for me. And why? Because I've seen this fight taking place. And what I've seen additional buying participation stepping in. And now I'm actually seeing a strong period here with some buying imbalance. So I can add into this. Now I'm pulling all of my stops. Not now, the ones that were down here are now migrating up as I'm adding into this position towards that first target. Because I'm now starting to see, the conviction in the auction. And, what should I see? I should see additional strength in the period delta and at that price as we move towards, the destination. And, I'm also going back and looking at, okay, again, remind me of where the structure is and where my destination is, so that I stay grounded in the context. I don't want to get too myopic looking at a small time frame. That happens all the time, is everybody's looking at small time frames like this. And I'm really only looking at these to enter, set my stop, and then I'm back here staying grounded in what's happening overall.
I think that's super important too in this type of market. Like not yesterday and necessarily today, but for the last 2 weeks, it's been like chopped up. And if you're not staying grounded with that longer time frame, still, you can get eaten alive, in my experience, from trying to wait for that trigger to come back and then getting stopped and trying to re-enter. So going back to that longer time frame, I agree, Josh, can definitely help keep you focused and grounded on the overall structure and what we're looking at big picture.
Yeah.
Yeah, you need to know going into the day, are you stepping into a steam train, or are we just range bound? Like when you look at a counter trend trade on a day that we're breaking out in the NASDAQ, or if we're continuing to go higher in all the indexes, and you look at it and say, this is what's happening. If you don't have that context in your mind and your first look is a short because it hit resistance, that short, it could potentially be the only trade you take of the day, because it's a loser. Could be
the last trade you take.
Right.
Yeah.
So it's, you have to, and that's where the order flow, I think, really comes in to help in those moments, because if you did see that reaction off of that area in a counter trend or with the trend, it gives you that also the ability to hold that winner, or the ability to puke that winner a little bit quicker, or a loser quicker. It all comes within the context.
Absolutely. And one other thing to point here, that like these imbalances. So I nest stops below those. I get questions all the time, like, where should I set my stops? And I'm like, so, because there'll be like kind of these arbitrary prices that I'll see traders put stops out of, like, oh, it's 2 points or 4 points, as if the market cares. It doesn't care about your stops if it's an arbitrary price point. It cares about areas of strength where their participation. It cares about like key references, like an opening range, high or low. So like if I'm adding into this position, I care very much about where strength came in. That strength should not get taken out. If it gets taken out, then whoever that impulse was that came in there that I was joining, they got taken out too.
Exactly. I go back to some of the notes I took from what you said is, and as you're seeing it more come to life now, as we look at it as the playback, building a story, it's really about having a vision of what you're looking at. I think it helps you build that confidence within that trade. That's why I love how you put into your playbook these certain traits that you're looking at, because you have seen how those scenarios have played out over time. And sometimes you're going to say, well, look at this is not what I expected, and maybe that there's an adjustment. And other times you may see something where you're like, this is exactly what I've seen work time and time again. And all of a sudden, that becomes, your trade of the week or the month or whatever, right? Because of being in that moment of understanding all of the history of that trade.
Absolutely. So in this one, I right now in this position, I get stopped out, right? So I added into it. I had this strength and the strength got canceled out. Now, the question is the opportunity and the destination off the table? No, because I haven't gotten there yet. So what I need to do to add back into this position and reestablish position, I need to see either these sellers that take me out not get any follow through whatsoever and trap themselves again, because we're still above that key 50,060 area. We're still above VWAPs. So if I see either the seller's trap, like the impulse, and then come right back through that, I can go back in and reestablish the position. Or if I see additional strength because the target is still there. This type of behavior gets people who don't know where the destination is all kinds of sideways. If you're just looking at that price action and that impulse, you think, oh, this is a go, and you're just trying to hold on for wherever that is, and you don't know where that is. In this case, it just said, hey, like caution, right? Let's see if there's more behavior that I can get back into, that I can defend or get out of Dodge. Right?
Yeah. So as we're running a little bit tight on time, Josh, how much time do we have in this? Because I want to announce some winners for our iPods. And also I wanted to maybe spend a couple of minutes looking at the live price action right now. And because obviously we're getting a little bit of sell-off here in S&P, maybe we look at some of that order flow.
Yeah, absolutely. So ultimately, I'll just tell you, I mean, and you can go back and look at the trade today, but we did push back above 15,090. I got full boat and got almost a 230 out of that. So that was using these tools and a playbook to get there. So let me go to live markets, and you can rock and roll on whatever you want to announce.
So what we'll do real quick, Ian, as we're back to the live markets here, and we're going to take a look. Well, obviously, everybody put your questions in chat. We'd love to hear from you. We're going to take a look at live market action right now. But Ian, we have something to give away. What are we giving away this week?
Yes, we do. Yeah, so we've got 2 pairs of the AirPod Pro 2nd gens, and you're going to get your initials engraved on those too. So very awesome. I'm a little jealous of our winners here.
That's cool.
As someone who just picked up a pair of AirPod Pro 2s. So the winners we have are Monroe and Mocha Trader. Okay, so Monroe and Mocha Trader will be in touch from Edge Clear just to let you know you won in case you're not here or whatever. No worries there. And then we have 2 runners up just in case those winners don't claim the awesome prize. We've got Titus Rustin. That's Titus Rustin, and GWN, all caps, GWN. So those are our runners up. So we'll be in touch again with all 4 of you. And hopefully the winners claim their prize. But if not, you runners up, you're next in line.
Yeah, everybody, just a reminder, we do this every month. It's the last Wednesday of every month. Unless there's a schedule change, it's typically when we are live. So you have the whole month from following today's show till then to sign up at edgeclear.com/deli, edgeclear.com/deli. Free to sign up. We give you guys these shows, and we give some gifts away to traders out there. And it's been great so far. And we get to bring shows to you today like we are with Josh. And I think what we'll do is before we close out here a little bit today, number one, if anybody has any questions or anything, please drop them in the comments. We love to hear from you. We'll be happy to answer any of your questions if you have any. And Josh, let's take a look with the live markets. Let's have you and Ian take a look here on the live markets, and let's talk about a little bit what's going on. I'm actually seeing we're below the VWAP for the day. I'm seeing we're back down a little bit here. We had some volume, and maybe just talk about some things that you're saying.
Yeah. Well, let's talk about like what's the next playbook trade that could potentially be in play for me.
Perfect.
And the playbook trades, and this using the market profile graphic. What's cool about that is that they're consistent day types. So the idea that I'm thinking about right now is either what I'd call an IB go with on a pullback or an extension fade. And specifically, if you look at the volume profile, we've got kind of two key areas we've been developing around. One is that 15,060. And then the other one's up here around 15,177. We've traded above the initial balance, extended about 50%. So we've met that stat. What that's telling us is that so far, buyers, were driving the auction. What the IB go on a pullback is basically saying, I'm going to trade essentially back to 15,050 and look to be long for rotations back up into the range, probably towards the initial balance, so long as I hold the initial balance low. So that's why I've got an alert here at 15,063. However, if I, try to attempt higher first and then fail, the extension fade would be the short to that 15,063. So I've got destinations for either one of those. Then the question is then going to the small time frame and saying, all right, well then from a volume analysis, what's in play and what's most likely to happen? If I know that 15,060 is likely in play, which it looks like, we're looking to push that direction. So I'm actually going to establish a short here towards 15,060. I'm leaning into strength that came in below VWAP at 15,126. So 127 is essentially my hard stop. Get my stop in here. And
you got around 60, 70 points of risk. Is that what you're saying?
Yeah, so we're at 90. We're looking for 60. We're
oh, you're at 9. I got it.
Yeah, so we're right in here. I mean, that's the absolute risk. Really, I don't want trade above 113 at the ETH VWAP. Like I want to see it, stay south of this price to go down to this price and then spend some more time down here. If we get back above here, then we're likely to rotate in this direction. So fine if they want to push up in here. I don't want much above this. I want that to keep kicking people down, but my hard stop is right here. And entered right here on the 90. Now, if I get additional selling strength, I'll pull that stop down to defend where that selling strength is in this period.
Yeah, it's small in my window, so I can't see the prices, so I can't see what's going on in the Nasdaq. So the play is 15,090 short. Yeah. Hard stop is 15,127.
Hard stop, really soft stop at 113.
Soft stop at 113. If it were to go to 113, what determines the soft stop? You talked about that.
Yeah, that's where we're looking at that. What's that behavior? Is there impulse in the order flow? Is there momentum around that? What's the tempo look like? I don't know what's really driving the sell-off. It could be a news thing. So, if it's a news thing, we could eat right back through it real quick, right?
Yeah, I love how he puts that, everybody. I think it's such an important thing. If you've got a wider stop, right, and you look at it and he has a soft stop and he talks about what happens in that moment when it gets there, I think that's an important thing to add to a playbook, especially when you're trading a market like the Nasdaq. Why eat the whole stop? If it gets up there, I mean, it could be at the next level in a blink, and you see what your wrong trigger is, you use it. The question I'll have for you, Josh, is if that happens, let's just say the wrong trigger triggers for you, and then it doesn't hit the hard stop, and all of a sudden you see action the opposite. I mean, that's the pattern I think a lot of traders can end up getting into, because they jump the gun. They're like, oh, I didn't want to take as big of a loss, or maybe they're over analyzing in that moment. And then ultimately you see that look that you really wanted back again. Is that a re-enter? Is it dead? How does that work?
Yeah, I mean, well, that can depend on. I mean, for me, that's largely informed by like what work I've already done today, and this is a much smaller trade than the one that I did earlier, so I'm not that excited about it. Also, this is during lunch, So I'm breaking a little bit of a rule. Typically, I would not enter a trade between noon and 2 p.m. Eastern.
Why is that? Why not?
Because the participation, the volume, the conviction in the order flow. I mean, you can get really just like no follow through. It doesn't take much to bring in an order and challenge that. Much cleaner, early in the session or kind of into power hour. Also, guys, it's retail. This is retail show right now. Why can you push it? You could have an order come in that pushes that. We come back after lunch and institutional desk decides, no, we like what's going on. They just run right back through you. So, what part of the criteria of a playbook is even knowing what time you want to be active. And if it doesn't meet those criteria, that's why this is like a D setup at best.
Yeah. I mean, unless we're really trending and I'm already in something, I'm never really trading between 11 and 1, maybe 2, right? Until we get to that power hour. Yeah.
Give yourself the psychological rest. Go do something else.
Yeah, it's important to build in breaks. Ian, before we let everybody go today, what are your thoughts on some of the things that we discussed today? Anything you want to talk about? I know these aren't your charts, so I'm not going to put you on the spot to talk about.
No worries. I can make enough sense of them. I think one thing that I'll add to, and it's just within the context of what Josh already touched on, be patient enough to accept the risk that you're willing to accept for the size you're trading, right? So when we talk about these things and, Josh mentioned where he'd have a stop on this trade. If that's not your risk tolerance, right, then that's maybe not your trade to take, right? Yeah. You can maybe be a little more patient and see if price gets closer to that, where you can put a little tighter stop on, things like that, where you're still following the rules of knowing that area where you're wrong, but maybe you're waiting for a better entry price, right? Josh and I talked about this a while back. Are you the person who's buying the house to flip it the next day, or are you the person who's buying the house to hold it for the next 30 years, right? So if you're flipping it the next day, you don't want to have to take a lot of risk on that potentially. You want to be able to take that risk to where you're comfortable. So patience is really key. I mean, I got into back into trading futures really just this year after quite a break to trade options. And my first foray back into futures was totally just oversized for my account value, taking huge stops because I was just in that options mentality of, such a fixed risk and being able to kind of ride those out. So it's really important to know that.
Awesome.
Yeah, some great points. Josh, any closing comments for you today?
Yeah. I would say just work on your playbook. I mean, if you're struggling with consistency, use those 4 questions. The first question, I would say ask of a trade that I took, go back and look at trades that you took, ask what was kind of the driving input or the inciting event that gets you into that trade, and give it a name. A great way to track your performance and see how you're really performing is to go, okay, that trade is called this. I know that what I just took was an extension fade, right? I took a day after trend trade earlier. I know
nice trades, by the way.
What?
It was a nice trade too.
Yeah. So we're out on the extension fade, and we were given a gift, and now I'm not doing anything until after lunch, if anything at all, right? But the playbook will tell me whether there's something else to do. But naming your trades, spending as much time in the lab, knowing the performance on those, and just like any other business, I'm going to only deploy live capital around something I have high confidence in. And if I don't have high confidence in, I'm not putting capital in. All I'm doing is I'm burning actual capital and I'm building opportunity cost. So build your playbook.
No, that's great advice, Josh. And I think everybody out there can relate to that. We had a couple of questions. One, I think, is really something easy for us to answer before we go is, what is the main difference between delta and volume? Josh, you led the discussion today. Explain the difference between delta and volume.
Yeah. So, I mean, volume is just the cumulative number of contracts either in a period or at a price. Delta separates those contracts traded between, was it a sell or a buy? And the wider that is, that's that string theory, that impulse. So if we see big selling deltas, right, or large cumulative delta to the buy side, what is that telling us? Is that the impulsive market orders were either buyers or sellers. And that's what it measures. It measures just market orders, impulsive orders. And that's why it can be helpful to help us see some of that impulse strength.
Awesome. Thank you so much for the questions. Thank you guys so much for today's show. Remember, follow Edge Clear on Twitter. Ian and Josh as well on Twitter. Both of their Twitter handles are down below. Josh, I know, also has a course, and we're going to be able to put his chart deck today at anthonycrudele.com. Some people are asking, when are the shows on? You can go to anthonycrudele.com, get on our email list. And if you're a subscriber, you get the chart decks. You get a bunch of videos I have behind the scenes. It's all free. So go and check that out at anthonycrudele.com. And if you enjoyed today's show, remember, it will be on audio everywhere you listen to your podcast, iTunes, Spotify, all the great places out there for podcasts. And of course, this is recorded here on YouTube. Hit the like button if you enjoyed it. And guys, thank you so much, man. This was great.
Yeah, thanks, Deli. Good to see you, brother.
Thanks, Deli. Great to see you.
Really just a lot of fun. And yeah, man. So I appreciate everybody. I'll see you guys next week.
Peace.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.